You know, it's pretty wild to think how recently crypto felt like this really niche, almost fringe topic.
Right, almost underground.
And now, well, it's everywhere. You hear about it constantly. And it genuinely feels like we're standing on the brink of some major changes, things that could ripple out into, well, all sorts of areas.
That's the really fascinating part, isn't it? How it started with, Bitcoin back in 2009, this kind of obscure idea, and has just built this incredible momentum. And
Well,
and for you listening, trying to sort through all the hype, the jargon, figuring out what actually matters for the future,
uh,
that's exactly what we want to tackle in this deep dive.
yeah, cut through the noise.
Whether you're wondering how it impacts your job, your investments, or maybe you just want to get a handle on where digital finance is headed without needing, like, a PhD in computer science.
Exactly. We're aiming to give you that clearer picture today. We're digging into a really comprehensive guide called The Future of Crypto, Navigating the Next Era of Digital Finance.
Mm-hmm. Good source.
Think of this as our way of pulling out the absolute must-know developments, the things that are likely just around the corner. Our mission here is simple. Extract that crucial knowledge and help you understand what this whole evolving crypto landscape might mean. For finance, sure, but also technology, maybe even how things are governed, society itself.
It touches a lot.
Okay, so where do we start? It's such a huge topic.
Well, I think the logical place is always the beginning, right? The
Makes
foundations.
sense.
So Bitcoin, like you mentioned, 2009, this idea of decentralized peer-to-peer digital cash from Satoshi Nakamoto, whoever they are, that was really the genesis block, you could say.
The spark.
The spark, exactly. And then not too long after, Ethereum came along and just massively broadened the horizon with smart contracts.
Okay, smart contracts. Explain those briefly again.
Think of them as agreements written in code that just execute automatically when the conditions are met. Self-enforcing contracts.
Right. No need for a middleman to check things off.
Precisely. And those two, Bitcoin as digital money, Ethereum enabling programmable applications, they really set the stage for everything we see now.
So Bitcoin gave us the what digital money outside the old system, and Ethereum gave us the how, a way to build things with it. And underpinning all of this is blockchain technology. Yeah, that distributed ledger thing.
Absolutely central. Blockchain is that shared, unchangeable record book. It's
Hmm.
decentralized, transparent. It fundamentally changes how we can establish trust online without needing a central authority.
And it's not static tech, is it? It keeps evolving. I
Uh,
hear about layer ones and layer twos.
Yeah, exactly. The technology itself is constantly being improved. You've got layer one solutions. These are focused on improving the base blockchain itself, making it faster, more efficient, more secure.
Like upgrading the main highway.
Perfect analogy. And then layer two solutions are built on top of layer one. They're like adding those express lanes you mentioned earlier, ways to handle way more transactions much faster and usually cheaper. Crucial for scaling up to handle, mass adoption.
Gotcha. So foundations laid, tech evolving. One of the biggest themes, maybe the biggest philosophy, seems to be decentralization.
Oh, definitely. That's a core driving force. You see it most obviously, perhaps, in decentralized finance, DeFi.
Right. DeFi, big buzzword.
And for good reason. What DeFi is trying to do is essentially rebuild traditional financial services, lending, borrowing, trading, insurance, you name it, but on these open, decentralized networks using smart contracts.
So taking the banks, the brokers,
Yeah.
taking them out of the loop.
That's the idea. Potentially making finance more accessible, maybe lowering costs. Of course, it comes with its own set of risks too, different kinds of risks than traditional finance. But the potential disruption is huge, redefining global finance potentially.
It does sound revolutionary. But the decentralization push isn't just about finance, is it?
Okay.
NFTs, non-fungible tokens, they started feeling like just digital collectibles, but they seem much bigger now.
Way bigger. NFTs fundamentally changed the game for digital ownership. Before, copying digital files was trivial. NFTs provide this verifiable proof of ownership for a unique digital item.
Scarcity, but digital.
Exactly. And that's incredibly empowering for creators, artists, musicians, game developers. Suddenly they have new ways to monetize their work directly, connect with their audience, control their intellectual property online. It's moving beyond just art into fashion, sports, ticketing, all sorts of areas.
It redefines value online, in a way.
It really does.
Okay, and then there's Web3. This term gets thrown around a lot, often described as the next internet. What's the core idea there, especially the decentralized part?
Web3 is essentially the vision for an internet where users, not giant corporations, are in control of their own data and digital identity.
So moving power away from the big tech platforms.
That's the goal. Instead of your data living on Facebook's or Google servers, you'd control it more directly. Technologies underpinning this include things like DAOs, decentralized autonomous organizations for group decision-making.
We'll come back to those.
Right. And decentralized storage so your files aren't just on one company's cloud, and blockchain-based identity systems. It's about putting the user back in the driver's seat, digitally speaking.
So lots of momentum towards decentralization. But then you have governments looking at their own digital, central bank digital currencies, CBDCs. Feels like a pull in the opposite direction.
It absolutely does. It's a fascinating tension. While crypto often aims to decentralize power away from states and banks, CBDCs are about central banks issuing their own digital currency.
Why are they doing that? Modernization. Control.
A mix of reasons. Modernizing payment systems, yeah. Potentially boosting financial inclusion for people without bank accounts. And yes, some element of maintaining control over monetary policy in a digital age, maybe even gaining more direct insight or influence.
So could they exist alongside Bitcoin and Ether? Or is it a competition?
That's the multi-trillion-dollar question, isn't it? They could coexist. They might compete directly. We're seeing pilot programs launching all over the world. China's digital yuan is quite advanced. Europe's exploring. The U.S. is researching. It highlights this fundamental debate. Who controls money and data online? Governments or decentralized networks? Big implications there for privacy and freedom.
Huge implications. And as this all gets bigger, regulation seems inevitable, right? It can't stay the Wild West forever.
No, and most serious players in the space don't want it to. Regulation is super complex, though. You need clear rules for things like taxes, protecting consumers from scams, preventing money laundering. That builds trust and allows for mainstream adoption.
But too much regulation could stifle innovation.
That's the balancing act. And it's even more complicated because different countries are taking vastly different approaches. Some are creating sandboxes to experiment, others are very cautious or even hostile. This global patchwork really shapes how and where the industry develops.
And alongside regulation, there are always the concerns about security. We hear about hacks, lost funds.
Yeah, those are absolutely critical issues. Security is paramount. The industry is constantly working on better cybersecurity, safer ways to store keys, more secure smart contracts. But it's an ongoing battle. And then there's privacy, too.
How so? Aren't blockchains transparent?
Often, yes, the transactions are public, which isn't always great for privacy. So there's a lot of work on privacy-enhancing tech, like zero-knowledge proofs, which let you prove something is true without revealing the underlying data. It's technically complex but important, plus broader ethical questions about data ownership and potential surveillance even on blockchains.
Right. And the elephant in the room for a long time has been the environmental impact, particularly Bitcoin's energy use.
Definitely. Proof of work, the system Bitcoin uses, is very energy intensive. That criticism has been a major driver for change.
Like Ethereum Switch.
Exactly. Ethereum's move to proof of stake cut its energy consumption drastically, like over 99%. That's a huge deal. And most new blockchains are using proof of stake or similar, more energy efficient methods. Sustainability is becoming a key focus.
Okay, so despite these challenges, regulations, security, environment, we are seeing big traditional players getting involved now. Wall Street seems to be taking crypto more seriously.
That's a massive shift. Institutional adoption is really picking up steam. Major banks offering custody services, big investment firms launching crypto funds or ETFs. It brings legitimacy, sure, but also huge amounts of capital and infrastructure development. It signals that crypto is becoming integrated into the mainstream financial system.
And it's not just happening in the developed world, right? You mentioned emerging markets earlier. Adoption drivers there can be quite different.
Very different, often more about necessity. In places with high inflation, unstable currencies, or limited banking access, think parts of Latin America, Africa, Southeast Asia, crypto offers real solutions.
Like what?
Cheaper and faster remittances, so sending money home across borders. A way to save that isn't tied to a devaluing local currency. Tools for small businesses that can't easily access traditional loans or payment systems. It's solving tangible, everyday problems for many people.
That puts a different perspective on it. And for everyday payments, even here, is that getting closer? Using crypto like we use a credit card.
It's moving in that direction. Stablecoins are key here. Those crypto tokens pegged to something like the US dollar, so they avoid the wild price swings.
Less risky for buying coffee.
Exactly. And technologies like the Lightning Network on Bitcoin allow for really fast, almost free microtransactions. Plus, work on interoperability, making different blockchains talk to each other smoothly, will make moving value around much easier. It could seriously shake up the payments industry.
Okay, shifting gears slightly. Beyond finance, blockchain seems to be powering new kinds of digital economies. Gaming, the metaverse.
Yeah, that's a really exciting frontier. Blockchain provides the rails for true ownership of digital items within games or virtual worlds. Think play-to-earn models where players earn actual crypto or NFTs they own and can trade.
Like Axie Infinity.
Axie was a big early example. And virtual real estate in places like Decentraland or the Sandbox, where you can buy, build on, and even monetize digital land. It's building economies within these digital spaces, underpinned by blockchain for scarcity and ownership.
And not just in games, but creators building their own little economies too. Social tokens.
Right. Social tokens are fascinating. A creator, an artist, even an online community can launch their own token.
What for?
To reward fans, grant access to exclusive content or events, maybe give holders voting rights on community decisions. It builds loyalty and allows creators to have a more direct economic relationship with their audience, bypassing intermediaries.
Interesting. And that ties into DAOs, you mentioned them earlier. Decentralized autonomous organizations. Sounds very futuristic.
They kind of are. Think of a DAO as an organization run by code and its members, often token holders. Decisions are proposed and voted on, and the rules are enforced automatically by smart contracts.
So, no CEO, no board of directors in the traditional sense.
Often not. It's a way to coordinate groups of people, often globally, towards a common goal, managing a treasury, governing a protocol, funding projects. It's still early days, lots of challenges around legal status and effective governance, but it's a radically new model for collaboration, a digital co-op almost.
Looking further ahead then, what are the big technical hurdles or next steps? You mentioned interoperability, making blockchains work together.
That's a huge one. We're likely heading towards a future with many different blockchains, each maybe specializing in something. Making them communicate seamlessly, exchanging data and value is crucial. Projects like Cosmos and Polkadot and various bridge technologies are focused specifically on this multi-chain future.
And what about our identity online? You touched on that with Web3.
Yes, the idea of self-sovereign identity. Instead of relying on Google or Facebook to log you in everywhere, you'd control your own digital identity credentials, potentially anchored on a blockchain.
So more control, more privacy.
Potentially, yes. And linked to that is building on-chain reputation systems, ways to prove your history or credibility online in a verifiable way, without necessarily revealing everything. It's about digital sovereignty for individuals.
Okay, one more potential intersection. AI and crypto.
Yeah.
Two massive trends. Do they connect?
Oh, there's huge potential there. AI could analyze blockchain data for insights or fraud detection. It could optimize DeFi strategies. Smart contracts could become even smarter with AI integration. Maybe AI agents could even participate in DAOs or manage crypto assets autonomously. It's definitely an area to watch.
Of course, we have to temper all this excitement with a dose of reality. The market is volatile. There are risks, speculation.
Absolutely essential to remember that. Crypto markets are notoriously prone to booms and busts, hype cycles, and speculation. Building sustainable, resilient systems means focusing on real utility, robust security, managing risk carefully, and not just chasing the next shiny object.
So pulling it all together,
Yeah.
as we look out over the next, say, 5 to 10 years, what are the big picture possibilities? Where could this all lead?
Well, you could see a scenario of really widespread adoption where crypto and blockchain are just integrated into finance, supply chains, digital identity, entertainment,
Yep.
becoming almost invisible infrastructure.
A regulated mainstream path.
Possibly. Regulation will be key there. Or you might see technology breakthroughs solving the big challenges, scalability, user experience leading to another wave of innovation. But there's always that underlying tension.
The decentralization versus centralization question.
Exactly. Will this technology ultimately empower individuals and communities? Or will it get captured or co-opted by the existing powers, whether governments or large corporations, just in a new digital form? That core question feels very much still in play.
So to wrap up, we've journeyed from Bitcoin's origins and blockchain basics through the rise of DeFi, NFTs, the whole Web3 vision.
Contrasted that with CBDCs, looked at the hurdles like regulation, security, environment.
And seen how it's moving mainstream with institutional adoption. finding unique uses in emerging markets, and powering new digital economies in gaming and beyond.
It really covers a vast landscape now, from niche digital cash to potentially foundational tech for finance, the internet, governance. It's been quite an evolution, and that push and pull between the decentralized ideal and centralized control seems like it will define the next chapter.
Which is why, for you listening, getting your head around these trends isn't just about tech or finance anymore. It's about understanding shifts that could really reshape how we live, work, and interact, whether you're directly involved or just observing.
It connects to so much. And maybe that leaves us with a final thought to ponder, something building on that core tension. In this future shaped by decentralized tech, how much responsibility falls on us as individuals to think critically, to collaborate, to ensure it actually develops in ways that are genuinely empowering and beneficial?
That's a powerful question. It's not just about the code, it's about how we choose to use it.
Exactly. So stay curious, keep learning, keep asking those questions. It's a fascinating space to watch.